Some investors like to think they can predict political and economic developments which will affect the financial markets. But markets often respond to news in unexpected ways. To illustrate this point, investment manager Victor Haghani devised a trading game and invited current and aspiring financial professionals to play.
We built a game that would let players see the front page of the Wall Street Journal one day ahead, so telling you the news from the day ahead, but we would black out whether stocks went up or down or whether bonds went up or down. But we left everything else on the front page of the Wall Street Journal. So it might say, Fed decides to keep interest rates low for longer, or it might say U.S. employment report came in much stronger than expected with 400,000 new jobs created. Or whatever, oil goes down dramatically. So lots and lots of information, but just not what did stocks and bonds do.
Haghani and his colleagues randomly chose days over the previous 15 years when markets had been particularly volatile. So players would see the front page of the Wall Street Journal from, say, a Monday, and then, based on that information, would trade stocks and bonds at Monday's closing prices. In theory, knowing the news in advance should have given the traders an edge. But around 10,000 people have played this game, and most have struggled to beat the market.
People just didn't do very well. That on average, people kind of broke even. A bunch of people went bust. Some people doubled their money. But on average, people pretty much broke even though they had all of this information. They also evidenced some pretty weird kind of decision-making around how big to bet on these different things. And what we saw was that the players did better betting on bonds than on stocks, but they bet more of their money and more times on stocks instead of bonds.
This experiment is another reminder that markets are broadly efficient, and knowing what to buy and sell and when is very difficult. Most investors, including the professionals, cannot do it consistently well.
If you can't make money consistently with tomorrow's news today, then how are you going to do with tomorrow's news tomorrow? That if you can't really make money like that, then please don't imagine that you're going to make money just getting tomorrow's news when it comes out naturally. And so I think this just even really emphasizes the difficulty of taking public kind of macro political information and trying to benefit from it. I think it makes it even more clear that that's a fool's errand.
In short, it's enough of a challenge to predict the future, whether it's election results or bad economic news. But predicting how that news will affect the markets can be harder still, and most of us shouldn't even try.